automation is coming to every single industry if it isn't there already, and it's going to impact pretty much everybody, including commercial real estate. And your next guest says the AI revolution could reshape the space, potentially slashing jobs, but also creating new opportunities. Joining us now is Ron Kamdem. He is the head of U.S. REITs and commercial real estate research at Morgan Stanley. This is interesting because, you know, software development, Ron, I can fully understand that AI might take all the developers' jobs. Real estate was a little bit harder for me to square the circle. How will AI impact your world?
Great. Thanks for having me. What we did was we looked at Anthropic's economic index to look at the utilization rate of automation tools. And what we found is that about a third of the job function in the real estate space can potentially be automated. I think this is really interesting because this is an industry that hires about 500,000 people. And when you think about job functions such as sales, such as management, it's a significant opportunity. They're spending about $90 billion on labor a year. That's a $35 billion saving, or 16% of operating cash flow. So we certainly think it's worth paying attention to.
Let's say, what specifically in the world, because my little brain, Ron, I'm thinking about buildings, right? Just like giant buildings. But I assume it's the jobs behind the buildings that would be automated. What exactly could be AI'd in the commercial real estate world?
There are really three categories to look at. So one is customer-facing applications. So if you think about in the apartment space, virtual leasing assistants, so that customer never even has to go to the building before making that decision. The second piece is operationally. So every real estate building needs reporting services, valuation services, and so forth. All that paperwork that you think about to capturing the cash flows, or even just signing a lease, that could be automated. And then the third piece of it is actually the investment side of the equation. So if you think about deciding what building you want to be in, what market you want to be in, with enough data from the AI tools, they could start making recommendations there. We think this is a significant saving for most of the REITs.
You know, because we have talked about this interest rate rolling disaster for a lot of real estate in cities like a San Francisco, where you might have a lot of Class B type buildings and a lot of people are still working remotely. Is that, by the way, and that never came to pass, there was a lot of refis that were able to happen. Is that off the table, Ron? Like, is the real estate fear officially over?
Not necessarily. I think it'll be a scenario of puts and takes. So on the one hand, you think about this expense saving opportunity, right? More efficient labor, better return on that capital. But on the other hand, I think the job growth is the biggest demand driver for the real estate market. And to the extent that there's sort of less hiring near term, that could be a headwind and continue to be a headwind for the office market. The question is just how much of those jobs are reskilled or retooled into something more productive in the medium and long term.
Yeah, because, you know, the real estate fear index was high a couple of years ago. I went to San Francisco. I saw like 4 people in the middle of a workday. It's a lot better now than it was then. Are there still segments of the market that you're worried about? A CBRE is one of your picks, so obviously not them.
Yeah, we certainly think the brokers and services, these are the companies to watch for how this AI implementation plays out in the real estate space. The reason being they have the largest workforces, number one. CBRE employs about 140,000 people. But the second is they've got the capital and they've been willing to sort of invest in these AI tools, these productivity tools for their employees, as well as think about the financing that needs to happen on the AI side, the data center build out side. They benefit from that. So I think that's really the focus of this piece is the brokers and services are going to be the playbook. In terms of the markets, New York still feels really good. I think San Francisco, with the return to office, is starting to get a little bit better, but you're still in a market where net space demand is declining. So you haven't quite turned the corner yet, but we're going to be watching it closely.